Hey, what's up guys? Quick video. So a lot of people who enjoy the opportunity to invest in hot startups when their stock becomes public for the first time or they IPO. Just a quick word of warning that many times the more well-known companies that IPO can get overhyped, and retail investors or amateurs make the mistake of equating a great product that more and more people are signing on to with a good valuation of the stock price. Those are not the same thing. If you don't know how to value a stock price, you're just gambling. So if you're wanting to gamble, go right ahead. That's on you. However, if you're trying to invest, you need to be informed. And when it comes to IPOs, it's important to understand that hype does not equal value. And product quality does not totally equal value. It's an important factor. It's very important, particularly for long-term growth and longevity of the company and the ability to become a long-term profitable company. However, it is important to recognize that oftentimes in the IPO market, it is a very volatile place to play. This year, you can look at a number of companies that have lost significant value in the IPO market or shortly after IPOing. For instance, Smile Direct Club, who does the Invisalign style braces, mail order or online order, they're down significantly, like 60% this year, I think. Peloton is way down, and Uber is down as well, 30% or something like that. There's a couple that have done well though. Pinterest has done very well as Chewy, the online pet supplies company, has done well so far. I would just say moving forward, a word of caution is the public markets have shifted their risk appetite recently towards companies with more stable earnings and lower leverage or lower debt levels relative to their equity and the company equity. So with that being said as well, the private markets have begun to rethink the valuations in the wake of the significant, I would call it a debacle regarding WeWork. WeWork was just recently valued at $47 billion, and in a matter of 2 months or so, it is, as of today, it just got a bailout capital funding deal from SoftBank, who was already their largest shareholder besides the founder, Adam Neumann, I believe, for $9.5 billion. It valued the company actually at $8 billion. So we're seeing investors change the way that they're looking at new companies, particularly those who don't have profits to show for their efforts. Now, profits for a new company are not all there is to the game. There is customer growth and revenue growth or sales growth that I would say are very important, particularly for startups or high growth companies. However, when it comes to IPOs, if you look at that income statement and that number's at the bottom line is negative, I would be very hesitant about investing in an IPO in this current environment, in that type of scenario or with that type of income statement. If you look at the balance sheet and see that the debt to equity ratio is very high as well, that's another factor that, with these highly leveraged companies right now, even though interest rates being so low makes the cost to service that debt fairly reasonable, I think that equity investors are recognizing that earnings quality, earnings period even, are undervalued at times, and the price to earnings multiple that is being put on some of these startup companies that haven't proven that their business model can lead them to profitability are being questioned, and you're seeing a multiple reduction or, in effect, a reduction in the price of that stock. So be careful when you're investing in IPOs. They're highly volatile. They can go way down very quickly. They can also shoot up quickly, but you're playing a game with professionals as well. So take time. Don't jump on the hype train particularly if it's a company that's well known or has a lot of name recognition out in the public, like an Uber who has gotten crushed, or Peloton who's gotten crushed. Pinterest is the flip side of that. They've done very well, but if I'm not mistaken, I believe they have been able to turn a net profit. Don't quote me on that though, because I didn't check before making this video. Anyway, until next time, that's my 2 cents.